before investing into any stock whatsoever, I strongly urge you guys to research it beforehand. I wish that I had known about this tool before I invested into the stock market when I first started out, but it's something that I had to learn along the way. When you hear a lot of people talk about do your research, this is one of the best ways to do your research. So this is portfoliovisualizer.com, right? Essentially, it is a stock research tool that will show you past performance. So I'm going to proceed in going into tools and then go to back test portfolio. So you're going to go to customize data, and then you have portfolio assets here, but we're going to get to that shortly. You're going to go to settings instead, right? Then you're going to go to initial amount. So initial amount here, what we're going to put is $100,000. You could set this as far as any amount that you want, but I typically put $100,000 because the more you put, the more you're going to see long term. And that is a good benchmark to start out, just to see much more of a difference. You could put $1,000 if you want, or $100, whichever one you're choosing, but I typically like to see much more money in these graphs whenever it does come out. So I'm going to just stick to 100,000, and then we're going to click display income. Display income is usually toggled as no, so you want to make sure this is always toggled yes, because some stocks that you invest in might have some dividends, and you want to also see the dividends that it is paying you out year over year. So let's go over to portfolio assets. So usually there'll be a benchmark here. There'll be some benchmarks, usually like the SPY. The SPY is basically, an index that tracks the S&P. You can choose to do this or not, whichever one. I typically choose none, but for this example, I'll just stick with it and just show you guys just something that how the market is doing, but also like how it measures up with the portfolio I want to come up with. So Apple is a stock that I currently invest in myself. I'm also going to be putting in Microsoft because I also invest into Microsoft, and I'm going to also put NVIDIA. And these are all examples, okay? So let's say I want to invest in NVIDIA, Microsoft, and Apple as a new investor. I'm going to make sure that the portfolio for each, because it's going to measure up in terms of each portfolio, right? Side by side each other. And it's going to be very clear for you guys to understand. Make sure the asset allocation is 100%. So this is 100% of $100,000, okay? If you start to, let's say, for example, in portfolio one, you start to put like, let's say 5 and then 95 up here, and then, or you want to break it up 75 and 10, and, it's going to give you a much more like cut up version in terms of your returns, because you're not investing into that specific stock. So just for argument's sake, right? So you can see it visually for yourself, just put 100%, in terms of, for these examples here. So I'm going to click Analyze Portfolio. So the portfolio analysis is from January 2017 to May 2026. So here in Apple, the annualized return is 29.9%. The benchmark here is the SPY, as we know before. Benchmark relative is 14.2%. So that means that Apple outperformed the SPY. All right, Microsoft. So let's see here, 24.9%. Benchmark relative, that's what it says here, 9.3%. And NVIDIA, right? So NVIDIA is 59.3%. All right, so as you can see here, so as mentioned before, Apple is sample portfolio. That's portfolio number 1. Portfolio number 2 is Microsoft, and then portfolio number 3 is NVIDIA. So $1.1 million is what you would have if you had invested $100,000 into Apple from January 2017 to May 2026. Same thing for Microsoft and same thing for NVIDIA. If you had invested that same $100,000 into the SPY, it'd be $392,000. This is something that really helps me visualize what could be possible, right? What could have been possible had I invested this money since 2017. So as you can see here, so it starts to go up from $100,000. So that was from 2017. And then, as you guys can see, the stock market goes up and down. This is natural, right? When you invest into certain stocks and you have high conviction into it, typically what I do, I usually hold for a long period of time. Okay, that's part of the game. That's part of investing into stocks. So you're gonna see highs and lows, especially at the beginning when there's minimal money invested into it. You're gonna see highs and lows. The more money you invest into it, the higher the returns, typically, right? All right, so start to see in 2021. This was like the height of 2021. Here for Nvidia, and basically for the other portfolios, for Microsoft and Apple as well. And then it starts to go down. Okay. Then it starts to go up again in 2023. And it keeps going up in 2024. And then it goes down a little bit in 2025, and it keeps trending up. So based on this, right, the $100,000 you invested in Nvidia, more than 10x, way more than 10x, right? So the thing is that this is something that you really want to pay attention to, right? This is something I wish I'd known when I first started investing, because had I known this, I would have made better investment decisions. The thing is as well is that in portfolio income, this is your dividend income, right? So in Apple, right? So Apple is $2,100 in 2017. Microsoft is $2,500. Had you held on from 2017 till 2025, you start to see that it's very apparent that your dividend income had increased. Mind you, I didn't put in any additional money into this at all, right? This is just from the $100,000 you originally invested into. So this is the power of compound interest, right? And you just put it in, you leave it in, the dividend growth rate just starts to do the work for you. So based on this past performance, I would typically say I'm going to invest into Nvidia, right? I invested in all three stocks, but based on this, I'm going to say, for argument's sake, I'm going to invest into Nvidia because that gave me the highest return. So past performance does not ultimately mean that, it's going to be like that all the time. So what I'll typically do, I'll go to Yahoo Finance, and I want to show you guys a visual here. So the price point in Nvidia was, $2.61. And as of May 2026, it was around 236 as a high, right, for that month. Whereas in 2017, the high of that month was 2.80. Okay, so it's very clear, if you get into certain stocks sooner, especially high conviction stocks like Nvidia, that you're going to outperform, right? Typically, you're going to outperform the stock market. But what I like to typically go on is Yahoo Finance to specifically look at the 1-year target, because these are the price points that analysts typically, very credible analysts will usually use as a benchmark to say, yes, this is something that investors should keep in mind, that this is a possible price point that will be a year from now, right? Doesn't mean exactly it's going to hit that price point, because that's not the case all the time, right? It could hit that price point, it might not, but this is also, as an investor, would give me a lot more confidence to invest into Nvidia. So this is my framework. This is what I use. I'll use Portfolio Visualizer and Yahoo Finance, and at that point in time, I make my decision. Now, based on that, I want to invest into Nvidia. So I'm going to go to NVDA, and then we're going to go to market buy, and then you can put as much shares as you like. Okay, now if you put in market share, it's going to give you the value of one share for the current price point, right? you don't necessarily have to do that. You don't have to select market buy for this, because I'm using Wealthsimple on the desktop, right? Wealthsimple on the mobile app, and this is specifically for Canadians now, speaking to you Canadians out there, if you download Wealthsimple on your mobile app, it has a feature where you're able to set a fractional recurring buy, right? So what that means is, instead of you buying the whole share of NVIDIA for $205 US, you can literally select any kind of currency between Canadian or US currency, right? So let's say you want to put one Canadian dollar into NVIDIA, you're able to do so, right? So for me personally, I always set it for a daily buy into NVIDIA every single day. I don't even go into my brokerage app at all to invest into NVIDIA. It's already set for me. So unfortunately, on the desktop, I'm not able to show you guys. I wanted to let you guys know that you're able to do so on the mobile app. Just set and forget it without any checking on a daily basis in terms of the price going down or up. Like, it's just set for you. And the most important thing is consistency, right? Because when you set and forget it like that, and it's on a fractional share buy, so instead of it being $205, right? You're putting, let's say, 0.01 shares. Okay, let's just put dollars instead. Okay, so let's just say $1. It's going to show you the estimated shares. You can literally buy an estimated share of 0.0049, okay? And then you're putting it into dollars. So this is what it means by fractional share buying, right? So you're going to click next, and then you can add money or convert your existing balance. So right now you can literally buy it like that manually if you'd like, or you can go on the mobile app and you can just set it and forget it, okay? So you can set on a daily basis, weekly basis, or monthly basis. So yeah, that's pretty much a little tutorial about what I typically do to invest into the stock market. So if you guys really like this video, please like, share, and subscribe, and let me know what you guys would like to see in the next video.